Hello, everybody, and welcome to our show, Trade Talk, Markets the Week Ahead. Today, we're going to discuss Nifty 50 analysis, Bank Nifty analysis, some momentum stocks, some news that will impact markets in the coming week, and most importantly, what is the data telling us? So, let me begin with first, what are the major news drivers for the coming week? So on Monday, September 25th, we have the IPO of JSW Infrastructure, which is coming up and will begin. On Tuesday, September 26th, the US new home sales data is going to come. On Wednesday, September 27th, we've got the IPO, Valiant Labs. We've got the US durable goods data, crude oil inventory, which is expected. Thursday, 28th September, which is the expiry for Nifty, we're going to expect the US GDP growth rate and the initial jobless claim data. On Friday, the 29th of September, we're going to hear about the Indian Forex reserves, the total external debt, and the euro inflation rate. So again, like the previous weeks, we have some data packed days as well as two IPOs that are going to open. Now, let me talk about what happened in the previous week. As you all know, in the previous week, we had a red week. The Nifty closed 500 points below the previous top that it made above 20,000, and the Sensex fell about 1,800 points. If you see the global markets, Dow was down about 500 points and Nasdaq about 480 points. The Hang Seng seemed to be flat at 125 points. In the European indices, you had the DAX that was down 300 points. FTSE and CAC, just flat. CAC was a little down, which was 172 points down, whereas FTSE 27 points up. So if you see within the European markets, DAX seemed to have lost some ground, whereas FTSE seemed to close where it started from, and CAC gave a 172 points down move. So majorly all world indices down. We've been talking about outperformance of the Sensex and Nifty. This time it's definitely outperformed on the downside. Having said that, let's look at what we have in store for us in the coming week and what we've seen in the past week. So first, let's discuss obviously which stocks did well in the week and which were the losers. What really caused the Nifty to come down 500 points? So on the gainer side, we had Power Grid, Asian Paints. Shockingly, it has been the top loser for the past 2 weeks. Asian Paints gained some ground. Coal India, which has been one of the highest gainers in the past few weeks, again tops the table at about 1% gain. Mind you, a 1% gain in Nifty falling 500 points is definitely credible. Followed by Titan and NTPC, which had minimal gains. But yeah, the plus point there is they didn't end in red. So having said that, let me go to the stock that actually caused the fall, HDFC Bank. HDFC Bank, backed by a few analyst ratings as well as, some company commentary was down about 8%. So HDFC Bank down 8%, Ultratech Cement, which is down another 7%, Dr. Reddy's 5%, Wipro 5%, and JSW Steel 4%. So these were the gainers and losers of the week. Let me take you to some FII data. Let's see what the FIIs and the DIIs did in the previous week. So as you can see, FIIs have been constant sellers. As FIIs have sold throughout the week, they've not even spared one day. Obviously, the markets have told us that we've had constant red candles. Whereas DIIs, mixed bag, one red day, besides that, 3 green days, and overall green. So if you see the net figures in the cash market, FIIs have sold close to 8,680 crores, whereas DIIs have purchased about 1,900 crores. So there's a massive selling from the FII end. Obviously, that's the first reason of the crash of Nifty 500 points, driven mostly majorly by the FIIs. Let's go to what we love discussing, the Nifty chart. So let's see what Nifty had in store for us in the last week and what could happen in the coming days. So this, as you see on your screen, this is the Nifty chart. What happened on the Nifty, if you see this, the daily chart. On the daily chart, as I look at it, I've drawn one trend line, which is from this peak to this peak and the last peak that it made. So essentially, the last peak that Nifty made also was exactly at the trend line that you've drawn. So it's exactly taking resistance from that trend line, though it was an all-time high breakup, but it's taken resistance from the previous trend lines. And from there, these are the 4 trading days that we had in the week. 4 red days. Obviously, most of them gap down. Besides the last one, these are all gap down days. So this is what you see. On a daily, it's broken the first moving average, which is the green line. It's broken the first 20-day moving average. It's heading towards the 50-day moving average. Now, if I see in the recent past, okay, unless there is something very big economically happening around the world, geopolitical tension, or something domestic, normally we've seen when Nifty is moved from 17,000 to 19,900, the up move that we saw from 17 to 19, the one thing that it has held is the moving average, which is a 20-day moving average. So as you see, the 20-day moving average always has been respected. Besides the fact that it got broken somewhere here, brought about some correction, again moved above the average, made a top near the resistance, and is back to its 20-day. It's broken the 20-day on Friday. And if you see from March 23 till today, it's always taken the support of the 50-day moving average. So as history has it, it's told us that from the move, unless something drastically changes, in terms of the news or anything happening around the world, you can expect some consolidation around the 50-day moving average. That's where normally shorter time frame corrections take support. So as you see, the previous top we made from 19,900, it took support around the 50-day moving average, which was 19,200, went back, made a new top of 20,200, and is now coming back towards the 50-day. Now, you would ask me, what is the 50-day moving average? So exactly as of now, as I see it, the 50-day moving average is somewhere around 19,550. All of these are spot levels. The 19,550 is what we see on the Nifty spot. Hopeful if previously it's taken support from there. Let's see how Nifty behaves around here. But as a matter of fact, on a daily basis, daily chart, it has given a close below the 20-day moving average. Now, having said that, let me go to the weekly data. When I come to the weekly candle, this is exactly what I see. It's a more refined version of what we saw on the daily. So this was my first top. This was my second top. And here's my third top. If you see exactly taken resistance of these tops, these trend lines were drawn also during one of our sessions that we did. So, second resistance now, and what has it done? It has actually closed below the first candle, almost touching, or breaking half of the second candle. So here's what we're going to watch out for, what it does on a weekly basis. As of now, if you see the week actually, opened around 20,150, made a high of 20,195, which was below the previous high of 20,222. So it did not make a new high, but made a new low. That's the first sign of weakness. What is the low? The previous candle low was 19,865. This time the low is 19,657. So this is the first weekly candle that has made a lower top and a lower top. So that's the first signal, because the previous 3 weeks, we've always been seeing green candles making higher tops and higher bottoms. Let me now zoom out, go to a monthly time frame. On a monthly time frame, things still look under control. So if you see, I've made a trend line, which is touching the tops of a lot of monthly candles. And this candle also, the last candle which we're watching, this current month candle, still seems to be fine. The low of 19,250 is safeguarded. Obviously, it will be alarming if, like I said, on a daily basis, Nifty closes below the 50-day moving average and we break a monthly low. Then it's a little thing to worry about, because then you could see some lower levels. Having safeguarded that, this could just be a regular correction after a good one-side up move. and we could retrace back towards the older levels. So this was about the charts that we saw on the Nifty as well as the monthly, weekly, and the daily time frame. Now let me go to some F&O data and check. Before I come to F&O data, the support and resistance, important levels that you must watch out for in the week. So support one, the first support lies at 19,600 and the second support lies at 19,540. Mind you, the second support, which is 19,540, is very, very close to the moving average, which I mentioned. So that's our support. Let's hope, that gets safeguarded. Resistance, if you're talking about resistance, the resistance of Nifty is obviously the previous tops that it has made. So 19,800 becomes the next resistance, and obviously 19,980. So we have two resistances, 800 and 980, which is close to 20,000. The previous top, basically, that becomes now a resistance. On the open interest side or the derivative data side, here's what I see. So as we see it, in the open interest charts, the highest OI, highest OI in terms of the calls have now shifted from 20,000 to 19,800. So this is the first signal of this lower low that we're seeing. The data showing that there is highest call writing at 19,800, followed by 20,000. So these are two must-watch levels. Anyways, our supports lie around there. We already told you on the basis of charts also. Let's talk about, where the markets could stop falling or what could be the levels you could watch out for, where the put writing is. So the highest put writing seems to be a little away from what we are seeing now. The highest put writing is at 19,000 and which is followed by 19,500. Obviously, there is some put writing at 19,700. So we'll wait and watch and see what these writers do. But they're not as confident, hence writers are a little far away. So if you see, there is a bit of fear in the market, hence the put writing seems to be a little far off. But these are some levels which the OI data is suggesting. Now let me go to the Bank Nifty chart. Now the next chart which we'll analyze is obviously the Bank Nifty chart. Another chart that is important to track. Now the Bank Nifty, we've been saying it on and on. The Nifty is stronger than the Bank Nifty. And obviously, how can we say that? If you see the moving averages, right? Nifty had just broken the 20 DMO, the 20-day moving average. Whereas Bank has already broken the 50-day moving average. So that's the first signal on a daily basis that Bank is a little more weaker. Now, why would we say Bank is weaker? The answer to that lies in the previous slide that we showed you. HDFC Bank being the largest loser. Because of that, you see the Bank Nifty dragging. Now, on the daily chart, if you're seeing, this week was really bad for the Bank Nifty. We started somewhere around 46,200 and today we are at 44,600. Okay, that's a massive fall. If I see it on a weekly basis, it's a good 1,600 point fall in Bank Nifty. Now, what are the few things that we see? One is Bank Nifty could not make a higher top, made a lower top, made a lower bottom, has already engulfed the first candle, the previous candle, and now is very close to engulfing the previous week's candle as well. What is the one positive that we've seen? The trend that is started from almost April, which is above the 20-week moving average, has continued, and the previous fall that we saw from the 46,300 levels, it stopped at the 20-week moving average. This time around, Bank Nifty is again very close to the 20-week moving average. You might ask me what the level is exactly. The 20-week moving average is somewhere around 44,280. So 44,200 280 levels is the 20-week moving average. What is the close? 44,600. So about 300 to 400 points from here is the 20-week moving average. Previously, Bank Nifty took support from there and then started its upward journey. This time around, we should see what it does. If it breaks these levels, you can expect some correction to come towards the 50-week moving average. You see, The previous fall took support from the 50-week moving average and made a new high. In this fall, it was shorter. So it took a support from the 20-week moving average. Now let's see what it does, whether it sustains this or comes to touch this. For now, 1600 point fall. It took almost 4 weeks to bounce from the 20-week moving average to the new top, but it took 1 week to clear 1600 points from there. So now we'll see basically the pace of the fall is quicker than the rise. So this is a bit of negative sentiment there. Obviously, HDFC Bank seems to be the biggest culprit here, but that's how the Bank Nifty looks. Let me tune into the monthly chart and show you what we see on the monthly. On the monthly, chart, Bank Nifty still seems to have held its ground well. Tracking the same moving averages. The last time that Bank Nifty crashed somewhere around in June 2022 when we made a base, we made it around the 20-month moving average, yeah, somewhere around there. So this time around, obviously, we are above that. We are very close to the highs. If you see the weekly, monthly candle, the monthly candle is still in green. The low of the month was 43,830. We've not yet broken that. If that gets broken, you can expect lower levels to come in. We had seen a doji, which was at the end of a downtrend, and then obviously the uptrend started. For now, the data doesn't look as great, but let's watch what the next week has in store for us. Let's go to the support resistance levels and importantly, what the FNO data is telling us. So for the cash levels, for the support zones, the support is at 44,200. I have already told you this, and 43,800, which was the previous low. These are two levels which are very important. Write them down. If the cash breaks these, there could be further selling. However, the resistance, which means the previous stops, can act as resistance. 44,900 and 45,600. These are two levels which are also important. Let's go out and see some FNO data. What FNO data is really telling us. So first, I'll start with the highest call OI. Where is the most writing present? The highest call OI. So highest call OI as of now is at 45,000. So 45,000. Previously, it was 46,000. If you remember our last video, it was at 46,000. The OI has moved to 45,000, which is driven by some bearish moves. So the highest call OI is at 45, and then somewhere around 45,500. The previous level, which was 46,000, they're still writing there. So this is where the call writers stand. That means they are causing resistances when markets are going up. If you see the put writing or the support levels, there is a bit of writing at 44,500, not as big as the call. There is some put writing there. 44,000 levels, 43,500 and 43,000. Okay, so there is writing, and the highest writing is at 43,000. So, data suggesting there seems to be some fear, in the markets. Obviously, the upside seems to be capped on the basis of the call writing that we're seeing. But let's see how price action behaves and what these writers do around these support zones. Now to go to the most interesting part of our video today, some momentum stocks, some stocks which are showing strength even when markets have crashed, even when Nifty's crashed 500 points, some stocks are doing well. Let me take you through some of the charts and show you what these stocks are up to. So let's get back to the charts. Procter and Gamble. Okay, so PNG, one of the stocks, which are very, very famous. It's if I see the daily chart, it's a very, very smooth chart, right? This is the daily chart, and the breakout for the stock was somewhere around 14,000 levels. Today, it's trading at 17,000 odd levels. And if you see on the daily, it's respected the 20-day moving average very, very closely. So I'll take you to a weekly time frame and show you where we saw the breakout. So on a weekly time frame, I'm going to show you with a trend line and draw the trend line. This is exactly where the breakout came. Okay, on a weekly time frame, this is where the breakout came. Okay, and I'll draw one more trend line matching the So we had two sets of breakouts on this one. The first breakout was here at the 14,200 level, from where the stock went to 16,000 levels, a bit of correction. And the new breakout was at 16,100, is already at 17,600. In spite of markets behaving the way they are, this stock is still making higher tops, higher bottoms on a weekly time frame. Very interesting chart. Looks like some action, positive action happening around here. Let me take you to a monthly. If you see a monthly chart, it looks even more clear, even more better. So all the previous months, the tops have been broken. We are in the all-time high zone. Looks very interesting. Uh, you know, uh, Look for this momentum in the coming week and see how the stock fares. If I kind of zoom out on the monthly chart, what is it that I see? From the 800 odd levels, okay? For the 800 odd levels, which was somewhere in 2009, okay? The stock has barely broken the 20 months moving average. So it's riding the 20-month moving average consistently. And these are stocks which are the continuous compounders. So these are all your portfolio stocks. So this time around, again, it's moving away from the moving average, making new tops. This is a must in your watch list. Let me take you to the second stock. Our second stock for the week would be TCS. TCS is also an interesting stock. Let me start with the daily. On the daily time frame, okay, TCS is clearly outperforming the markets. So we've generally seen where the Bank Nifty stops performing, the IT sector picks up. And here's the best example of that. Of late, banks have started falling. Obviously, we'll see some charts from banking stocks also. But banks have started falling, and IT has done a breakout. So TCS did a breakout somewhere here. It's already up 200 points. So on a daily basis, TCS has almost made new highs after the breakout. On a weekly basis, it's broken its previous top that it made. Right, this was the previous top that it had made on a weekly basis, then crashed, came up, almost made the same top, crashed from there, and now again breaking out. So it's breaking out from its weekly consolidation pattern that we call. Very interesting stock. Again, must keep in your radar. And I'll talk to you again about USD INR and also talk about how it could benefit some of these companies, right? So TCS, another stock in our radar. Very interesting setup. If I go on the monthly, this is what I see. TCS the last time around when it touched 3,900, 4,000 levels, it had stopped, corrected a bit. It's taken some support. It's riding, the moving average. And this time around, if you see, from all the past candles, it has done a breakout. So if I see monthly charts, from 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 14 months. It's a 14-month breakout. Again, it's an interesting stock to follow. To follow, and let's see what it does. Obviously, stop losses is a must. If you're trading any stocks on the upside when markets are coming downside, you have to be very, very strict with your stop losses. But these are some stocks where the momentum is there. Let's go to the third stock. The third stock is another interesting stock. I will start with the daily, or this is the daily chart. Although Friday was a harsh closing for markets, Bank Nifty, none of the broad indices could sustain. There was one stock which was doing well in the banking space, 5% up, none other than Can Bank. The other thing that I see, and we've discussed it with few of our community members, is that it's made a low, which is equal to the open. When open is equal to low, generally the candles are very, very strong. So this time around also open is equal to low on a daily chart. And the stock is up 18 bucks, 5% almost on the stock. And it's given the highest close that it has ever done in the past. Okay. So let's go to the weekly and we'll track that. Okay. So this is not the highest it's ever done, but it's the highest close since 2018. So this is the highest close since 2018, which is almost a 5-year high it has closed at. So very interesting stock to track. Again, if you see the chart is, more or less sliding upwards. And this time around, the weekly bar is about 5% up. So weekly candle is about 5% up. If you see the last 3 weeks, all of these last 3 weeks have been constant green candles. So constant up move, buying on these last 3 week candles. So very interesting. And if you see the previous week, also the open and low is very close. So post that there has been buying and there was breakout. So we're going to track this stock also. Interesting stock to kind of track in the banking space. While Bank Nifty is kind of correcting, the stock is doing breakouts. So this again, this is one more stock that should be on our radar. So this is about stocks which are doing momentum. Obviously, some of the previous stocks that we've shared are also still in the green or have withheld the fall. So you must keep all of them in your radar. These are some fresh weekly ideas that we see. Now, next, let me go to the weekly breakdowns. Fortunately, unfortunate, we're seeing markets make some lower lows. So some stocks look a little weak. Some stocks look like, they're getting the bashing of the market. We have discussed two stocks, Vedanta and Dr. Reddy's. Let me take you to those charts and show you what we see around on them. Okay, so on a daily basis, Vedanta, we've discussed it even in our previous, weekly talks, that Vedanta seems to be a little weak. It's seeing lower lows on a daily chart as well. This is how the chart looks, not sustaining higher levels. On a weekly basis, this is, almost the 8th week, which is red, a continuous 8-week red on Vedanta. Let me go to the monthly candles. The monthly candles also don't look too promising. So this is what we see on the monthly. This time around, it's broken the 100 months moving average as well. So this is something we'll need to track. It's making lower lows basically on the monthly candle, monthly time frame as well. So there is some weakness seen on the stock. Be careful around there. The other stock here is Dr. Reddy's. Dr. Reddy's, if I see it on a daily time frame, the breakdown came on the Friday, the last trading day, where you can see it's broken lows of a lot of previous weekly candles. This is a negative sign. Daily candles is a negative sign. Let me come to weekly. On a weekly basis also, it looks a little negative. It's seen constant selling every time the price goes up. And on a monthly basis, it's kind of, after this rise that it has done, it's kind of, showing some profit booking signals. So Dr. Reddy's is another stock which will be on our radar. Unless the highs are not taken off, we'll see some correction or some reds on this one. Now let me go to our USD INR chart. Some of our users have asked us to show the view on USD INR. On the USD INR, on the last session, I had drawn some trend lines and said, we'll look for breakouts, whether on the upside or the downside. If you see, this is how the chart looks on a daily basis. On a weekly basis, the price is still within this triangle that we've drawn. Let's see what it does. Previously, this is a very, very strong resistance on the USD INR. A close above that or a breakout above that will cause the price to go up or the rupee to depreciate even further. So this is something that we are seeing on charts. And on a monthly basis, if you see, there is a huge consolidation happening on a monthly basis. So sooner or later, you can expect a breakout to come in or a breakdown to come in. If a breakout comes, it benefits IT companies. Hence, we're seeing some movement in the IT companies because they'll end up getting contracts and a higher value for the dollar that they earn. So some of the companies who earn in dollars and have a net dollar revenue benefit from this depreciation. However, the broader market kind of reacts to this in a not very positive manner, especially where outflows are in dollars. So this is about what we see on the USD INR. That's about our analysis on the Trade Talk for this week. I hope you benefited from this. Don't forget to show us your love. Put in your comments anything that you'd like us to add. Feel free to like, subscribe, and share it to all your friends who are traders. And stay tuned for all our weekly updates. Thank you so much. This is Nainesh Thakkar signing off. Take care and have a great weekend. and a happy trading week. Thanks a lot.